Well, hello, everybody. How is everybody doing tonight? Welcome back to another Market Conversations. I'm so glad that you're tuning in. Hello, Steve, Kelly, JDO, I apologize, Bill Gould, Scorpion, nice to have you. Kathleen from Hawaii, aloha. Hey, folks, got a really wonderful show planned for you tonight. My buddy Nick Black is going to grace us with his presence. Tonight, we're going to talk about what drives the economies. Right? Debt, assets, and confidence. One of the things I just want to lead off before I bring Nick in is that most folks forever have been risk averse. And there were many decades in our particular country's history, as well as other nations around the world, where folks could actually implement a savings plan. They didn't have to get fancy with investing in a market. They could just take their excess incomes, stuff it away in a jar. Some of them would venture out to banks and get yield on their savings for allowing the bank to utilize their capital. Well, in the environment that we're in now, folks, that's gone. Savers get crushed. We all know that with monetary expansion and monetary policy as it is around the globe, purchasing power of our fiat currencies is diminishing, and it's starting to diminish at a rapid rate, at rates we've never quite seen before, at least in the history of the United States. So with that, I just want to do a real quick history. Leading into the 80s, where I started developing my particular worldview, it really was an ushering in of an era of consumption fueled by debt, not fueled by productivity. Now, what this did is it did allow GDP to grow. But as the economy was fueled by debt, what it did is it turned us into creditors or debtors. And for most of us, it turned us into debtors. Today, only 2.2 billion people on the planet have a net worth of over $10,000. This is alarming. Here to discuss this and go into greater detail is my buddy Nick. Hey, Nick, how you doing tonight?
Doing good. Sorry, I just had to. I had to right swipe someone on Tinder.
Okay, it happens.
Said hot chick into crypto. Give me your private seed phrase for a date. I'm like, we're definitely doing that.
Yeah, not. So Nick, let's dive into this because, I mean, you're a few years younger than I, but I'm sure that you remember the 80s in some capacity and the explosion of the Reagan-Thatcher agenda of consumerism and the expansion of debt markets.
Well, I don't remember specific things like that, but I do remember, I mean, because it's obviously it's in the media, it colored kind of the movies you were watching and, you know, Wall Street and all this kind of things where people were just buying ridiculous stuff, ridiculous cars, you know, and I was like, and I always kept thinking like, are we rich or are we poor? I'm not, and I still don't really know if we even have an answer to that, but what happened is I think that was the beginning of like the credit card millionaires, where people started saying, well, debt, that's money too. Might as well just go get some stuff. And people just went and got stuff and they just kept getting it. And they really never stopped getting it. They keep getting stuff they can't afford. And then they can't. And another thing that was, I think happened is it was okay, kind of socially acceptable. I think in the, like, well, the 80s was kind of my formative years. I can't really remember anything past that, but I feel like people were like, my grandparents were solid with their money. They're like, don't buy things you can't afford. And then my parents were like, what difference does it make? And, you know, because, you know, people thought, well, if I have a credit card, then I have money. There was people, I remember there was a friend of my mom's who thought that if she still had checks in her checkbook, she still had money. And my mom was trying to explain that, no, those aren't money. Those represent a request for money from a pool of money. If you don't, they don't equal money. And the woman's like, but I have more of them. She's like, no.
And they're so willing to give me more. $5 buys me a whole new box.
But you know what? I think the woman with the checks was right. In that you can, people have found ways to just keep finding credit. Not only that, but it used to be where savers were applauded for being, responsible. Now that's irresponsible behavior. Matter of fact, if you're a saver, you're anti-American. You're like, oh, you want to just ruin the economy by saving all the time? They compare you to like people that collect ceramic cows and stuff like that, that live with a bunch of cats. You're one of them savers, huh? They vilified the word. It's really weird. And so now people that save are creepy. People that don't have a lot of debt, you're like, what's wrong with you? Something wrong with you?
Well,
I guess.
In a lot of ways, back when that era started, when you saw that labor arbitrage was becoming a real thing, right? American companies that had been responsible for building and producing goods and services here in the United States found much cheaper routes to productivity abroad. They moved. And it was no big deal. The shortfall from the productivity of our nation was more than made up for by the expansion of our debt, right? And even back then, even with just the expansion of debt, there was still things like a bond market there, where people could park money and earn a yield. These are times where I remember so vividly. My mother dealt with a state credit union. She was a state employee. And my first savings account was 6% interest on my savings. Can you imagine that, Nick? Going to a Bank of America and they say, okay, open a savings account and we'll give you 6% on your money. In today's world, that's unheard of.
Well, but it's all that kind of, they could afford to do that. They could really pay you for your money. That kind of behavior is the kind of behavior we see right now in the crypto lending platforms like Nexo and Celcius and things like that. But, what did you have in the 70s? You had, you actually had what looked like pervasive, widespread, everywhere and always, the monetary phenomenon of inflation. Like you had inflation, year on year inflation. Now you didn't have hyperinflation, but you certainly had enough inflation that it was cooked into the bond market. And even in the government, there were, certain issuances, maturities on the yield curve that were paying plus 10%, 10, 12. I think someone was telling me, a buddy of mine's bond trader, who's saying, I remember getting into things for 14% yield. He goes, it's insane. Those markets have all but died. And really, there's not much money left in those markets. It's forced people to become a lot more risk tolerant, or just to take a lot more risk, which is weird because in an inflationary environment, you would think, well, the economy's, if it's the correct kind of inflation, it's the result of an expansion in the workforce and expansion, that pull forward from employers saying, wow, the world's a better place. We're going to have to compete for employees. We're going to pay them better. We're going to have to compete for products. Let's go ahead and buy more products sooner. The hoarding effect kicks in and you start to game theory the other, right? So that's the good kind of inflation, healthy credit markets, free flowing cash and credit availability. And then there's the other kind where you just make inflation because you don't understand that the two are not correlated in the way you think. Like if inflation is a sign of a good economy in expansion, when the economy's contracting, you can't just make inflation and it equals good economy. And I think that's what central planners don't quite get. They don't realize you don't just pull on the other cord and everything's fine. And markets are a lot more complicated and confusing now. There's so many more little moving pieces than there were. You could probably in the 60s and 70s look at these markets and basically tell what was going on if you weren't a complete tard like the Fed. But you could look at these markets and go, okay, this makes sense. But then when we went into this kind of globalization of everything, and where you started, companies started not companies specifically, but sectors of companies started fishing for other countries where they could get products developed cheaper, and then and then certain products would migrate. So like when the superconducting industry came, that's all basically Hong Kong and things like that, where no one else can compete for a variety of reasons, with low wages for the laborers and all these kind of constraints. But long story short, things around the world, they all kind of coalesced in their niche where they were most capable to produce the highest return. It was like true capitalism, and then start tariffs and subsidies and meddling came in, and and rent controls and all these kind of mechanisms that central planners start plugging into the market when they are trying to get wrest control of it. And that only I don't know if it works, but it definitely doesn't work when you don't know what you're looking at. And I think that's what we have now is central planners and governance with a bunch of people all over the world that have very little idea what they're actually looking at. And so they retreat to these econometric models that are based on 60s Keynesian fare. And I just don't think it's robust enough to take in all of the data that we're, inundated with.
Well, and I agree. It's really, so I had a conversation today with my architect, and my architect is this incredible Costa Rican gentleman trained in Germany. So he's got a taste of the world. But money and finance was never something he really concerned himself with. He works and he stays employed and he does his thing. And we're talking about money today. He called me at a question regarding debt. He wants this new piece of equipment, and would have to go into debt to get it. And so we walked through the, necessity and return on investment and all that kind of stuff. And, I asked him if he'd done anything more with his retirement plan. Had he added any more Bitcoin to his portfolio since the last time I talked to him? And he goes, no. I go, is that because you don't have any extra funds beyond what you need to run your business and feed your family? He goes, no, the truth is, I don't know that much about it, and I'm hesitant to invest in something I don't know much about. And this is a bright, intelligent guy. And I think it just goes to speak to the importance of like your channel, my channel, and all the people that are trying to lift each other up around to get some financial literacy. I totally get not wanting to jump into something I don't understand. I think that's prudent, right?
Did you tell him the piece of golden advice that everyone is supposed to get when you hear that? Have fun being poor.
That went through my brain. That went through my brain, but no, it didn't come out of my mouth.
Oh.
And the thing about, it's really kind of interesting. I opened up the show with this. I really honestly believe most people are risk adverse. And I could easily understand not knowing economics, not understanding monetary policy, going, I hear about this, but I'm not sure about it.
Well, if you were standing on the sideline of an NFL football game and they were like, and you didn't know the rules and they said, Jerry, you're in. What? Yeah, you're in. Suit up. What are you talking? I don't even know what a suit is. Yeah. Here, grab this, grab that, suit up, strap in, hold your breath, ready, go. You're going to take that first snap. What are you talking about?
See ball, throw ball.
Yeah. So I think that the crypto space, risk aversion it's human. It's like, if we have no risk aversion, the humans that didn't have risk aversion die because they're not scared of things like tigers and bears and, water and, things that you should have a healthy risk of, like heights. There's healthy fear. And so I think that kept us alive. But investing is trading hours of our life for little bits of risk aversion. Like, and a lot of people probably are the other side of it, where they invest in things. And maybe it's easy, it's probably easier to invest when you don't know what you're investing in, because maybe if you knew, you would not sleep at night. Do you think these people that go balls deep into DeFi really know what they're investing in and how big a risk it is? I would say probably not. And I think that the more information you have, probably the less likely you are to invest in absolute dumpster juice. And so, but then again, if you don't have that segment of the people that throw abandon to the wind, a lot of this stuff never gets built because it'll never pick up steam. So you have to entice them with nonsensical numbers to get people to come take stupid risk.
Right? No, I get it. I totally get it. So Diego, my architect. So we have this conversation, and I boiled it down like this. I said, listen, I'm not going to be able to give you a full education. I'll do everything I can. I'm still learning. I'm a student. But here's a way to start. And so I suggested the age-old, go to the Hidden Secrets of Money series on YouTube by Mike Maloney.
They are good. They're really good.
You know what? He did a great job. And
yep.
I personally have always had this little kind of pet peeve dream that somebody will help me fund the creation of something very similar to that, only instead of gold and silver being the answer to everything, just sound monetary
just
policy.
Dub it over. Just do the same thing and dub it over. And every time he says gold or silver or whatever, just go Bitcoin. That would be funny. That would be funny. But yeah, somebody should do that and do it, do it in different languages. You know what I mean? We all need to start somewhere. Hail Bitcoin. Did you see, I don't know if you saw this little news tidbit. I think Honduras got their first Bitcoin ATM, but I did think that the Twitter news is bigger than people are kind of paying attention to it, where their TBD facility, which is like a kind of a forward-thinking, brainstorming, think tanky development factory, that they're going to be building a DEX for Bitcoin. And the idea is that any currency, any fiat currency anywhere in the world would have an on-ramp to a Bitcoin, kind of a Bitcoin-centric decentralized exchange.
With some kind of network-compatible universal QR code deal?
Well, they're basically saying, we're talking about what we're going to talk about. We have a lot of questions, but this is the path we're taking. So they basically announced that they are going to build a decentralized exchange. They don't have the answers yet. They may have to leverage some other protocols to get it done. They admitted that. They said that Lightning's not robust enough yet. But I thought that's a big deal. You want to onboard everybody, onboard them through Twitter. It's the same thing with Facebook. I mean, Facebook will onboard a third of the whole planet to crypto. People are like, screw Facebook. Man, you guys should high five Facebook. We wouldn't be here right now if it wasn't for last year for Facebook and for PayPal. I mean, they really turned the winter into summer, right? And PayPal continues to kind of push forward with private wallets and all things. But, you should be rooting for Facebook, I think. You should be rooting for them to get their products are going to be whatever. And their whole point is to go after retail banking. That's who should be scared. But the crypto community should embrace both what Twitter and Facebook are doing, even if they're not doing it for the right reasons. It doesn't really matter, because what's good for the goose is good for the gander. They're going to onboard half the planet, those two companies, half the planet to crypto. And that right there is where, and you know who's going to onboard the other half? China.
CBDC. So let's dive into this. So we used to have an economy built on productivity, right? And I'm talking about the United States.
John Carter, the answer is Lambo. Thank you.
The answer is Lambo?
The answer is always Lambo.
Okay. I like it. No, not really. But anyway, okay. So if we used to have a country built on productivity, and we can clearly see that that is no longer the case, what recourse does the common human have?
Well,
because wages only in specific fields are going to go up. We know that a tremendous amount of, we'll call it remedial type labor jobs are going to get completely wiped off the planet with robotics and AI. What recourse does the normal human have?
Well, I don't think it's just menial jobs. I think it's just
anything you can describe in a sentence.
That's it. Anything. Even if the anything is, I'm a doctor, I'm a brain surgeon, I'm a painter. Whoop-de-poop. I mean, are you seeing what they're doing on Art Block, where these artists just create algos and then the algos do the painting? They're selling for $3-4 million a pop. It's incredible. And so you start to realize, a lot of people are like, no robot's going to take my job. Yes, it will absolutely. And so you have to go just look past the personal kind of the personal affront and go, okay, if 90% of the human workforce is rendered obsolete, pushed to the sidelines for the efficiency and the hopeful material abundance that AI and robotics will hopefully proliferate, if they don't see us as wasted molecules and paper clips. But if there's a middle point where these general intelligent entities that are self-fixing, that write their own code, push us to the sidelines, hopefully you would think, well, that's when UBI starts to make a lot more sense. And if we all believe that we have material abundance, then maybe we won't be trying to blow each other up and stuff like that, right? Because if you take a bunch of people and give them abundance and they don't need 4 things, then maybe, right? That's what we're all working so that we can reach that point of abundance. I think most people. So why don't we do this, Jerry? What's your definition of monetary safety for you? Like, do you have a number you're trying to reach? I mean, like,
I do.
How do you kind of describe it to yourself?
I will be able to feel like I have accomplished my financial goals when the portfolio is up over 2 mil. So 2 million, I should be able to generate enough yield where I can live and do and be the way I want to be with no major concerns.
So, and everybody's probably should do some thinking on this. Why I say that, I was having coffee this morning with a buddy of mine who's a doctor, and I asked him, I said, so what's your number? Like, what's the number you have to reach? And he was like, what do you mean? I go, well, you're building a $6 million house. What's your number? Like, how much do you have to have in the bank to never worry again? He's like, I don't know. I'm like, well, don't you think that's important? And he just drank his coffee. But I think everybody should probably think about that. Like, in the same way that we should all know, income, expenses, assets, liabilities, and cash flow. Like, everybody should know that. And along with that, I think everyone should have a number, and they should realize that number every 20 years doubles, because every 20 years, just at 2% inflation, and that's, the minimum, the minimum, right? But if you buy into the Fed's 2%, then every 20 years, your buying power gets cut in half, meaning that your 2 million, Jerry, it's going to be 4 million. It's going to go up by 50% a decade. And I think people need to factor that in, because if you don't, you're going to hit your number, but it's going to take you 10 years to get there. Your number is no longer sufficient, and you're never going to get to that number. But I think maybe another way to look at it is to find a number that represents what your version of happiness is.
Well, I'm basing it off of yield that I believe will create an abundance for my day-to-day life, continue to compound the extra back into the principal. And the idea is eventually I'll just leave the principal to the kids.
I was reading a thing that said that to reach the same happiness as a billionaire, you could get 90% of the way there if you have all of your bills paid, and in the average market in America, an extra $7,000 a month. And what's interesting about that is, I feel like I would be happy with 90% of the happiness that a billionaire feels, right? The other 10% is for the centimillionaires and decamillionaires and all that, right? But if I could, and so you say, okay, and obviously every market's a little bit different. If you live in Los Angeles, you probably make that 10K. But for the most part, I think everyone here, I think that should be everyone's first goal. All of your bills paid, and this means zero debt.
Zero
debt, all of your bills paid, and an extra $7,000, an extra $7,000, Kelly, a month. Now, you don't have to spend that $7,000. You would invest some of it. You would play with it. You would be frivolous with some of it. You could be altruistic and give some to, people, with gray shirts that cough, whatever you want to do. But the point is that I think 7,000 a month, while it is a lot, it's achievable for people. And that should be, if you can get 90% of the happiness of a billionaire, and it's only 7,000 a month, well, dang it. I think that should be everyone's first goal, debt-free and $7,000 a month extra.
That would be fine. Although my little numbers, I'm hoping to be at my goal within 16 months.
Ooh.
And I mean, it could happen sooner. I mean, take a quick look at the market. Oh yeah, we're having a nice day today. But that's the thing about crypto. We get these swings. Like I'll watch the portfolio jump up and down 100 grand over the course of 2 days, and it's it's just normal.
It's weird the things if you're in the crypto space, it's very strange the things you're willing to accept on a daily basis. People are whining, that have, and I'm not trying to belittle anyone, but a buddy of mine who's a trainer got into crypto, 16 seconds ago, and he has like 430 Cardano and like 0.00001 Bitcoin, and like the beginner pack. Like, he goes, you know what? I'm all in. I'm putting $80 in. I'm like, you're gonna go all at once? You want to spread that out? And again, I'm not trying to step on anyone. We all started very small, and that's fine. But in this case, it is what it is. So, and he was telling me the other day, he goes, "What's up with Cardano?" I go, well, that's a big question. Like, where would you like me to start? That's just such a big question. He's like, my count, one day it's up $20, the next day it's down 17. Man, I don't know about this. Dude, I've had $1 million down days. Million. When you see $1 million, look, it goes down by $16, you can stomach it. It goes down by $50,000. You're not happy, but it goes down by $1 million. You start questioning your worldview. You start saying, man, should I have sold last Thursday? Am I an idiot? Like, will we ever? But if you are a long-term thinker, then those kinds of thoughts don't enter because you just don't care. I mean, I don't care. And on my up days, I don't care either because it's all fake. It's all fake until it's not.
And that's the thing, one of the interesting points that this comes up a lot in the Patreon group that I have. There's this thing, and it's this dichotomy. It's kind of weird. It's this thinking that you need to diversify yourself. And I'm thinking to myself, from what I understand, every quote unquote self-made wealthy person did not diversify. They concentrated their bets. They worked their ass off. And if they had the right bets, they got wealthy. And it's not until you get wealthy do you start diversifying to mitigate risk. I mean, that's really the entire reason to diversify. And so, you know what I mean? So I'm thinking about, I am putting thought to, because I see a future in the next, like I said, it's probably a year, 16 months, where I will meet some very strong goals that I had, and I'm going to want to protect X. You know what I mean? And does that mean that I have a 16-month time horizon for this market? No, not at all. I think this market is going to grow, ungodly amounts. But am I willing to continue to suffer not suffer, I guess it is suffering, a quality of life that I could easily expand by just realizing some capital?
So you're at that point. So this is a very interesting point. I think we had talked about this on another show, Jerry, about 6 months ago, where you get to a point where you look and the amount is enough where you go, I can buy everything.
Yeah.
Like you walk into a place that you probably shouldn't, and you look at things that you shouldn't, and you can buy all of them. And it's kind of dangerous, right? Because that's when it's kind of like in World War II at the end, where we almost blew up the whole world, but we didn't. But we could have, but we didn't. And I think that's what happens. You get to a point, and this is that sudden wealth effect. And in crypto, it is sudden wealth. No one slowly gets rich in crypto. What happens is you have nothing and you have everything in crypto. So much everything so quickly. And for those of you that are new to the space and you're like, screw you guys, I'm just getting started. You too will experience this. If you stay in this space and you have any, more than 14 bucks in it, you're going to experience these big rises in the market as the market swells, as it's growing towards saturation, where it doesn't make any sense. And you're experiencing the pangs of sudden wealth effect. No different than the guy that won the lottery and all of a sudden he has 3 million bucks. And normally what tends to happen is people get stupid. They don't understand that assets are not assets. They're more often than not liabilities unless they produce cash. So they buy all these things that then absorb their cash flow. Their cash flow goes to dust. Those assets become liabilities. They have to service all those assets, and then it's just a quagmire. And then they become incredibly depressed and unhappy, and people latch onto them and all that. So, and I'm not going to, the way to deal with all that is when you have an economic change. And again, I'm not a guru, but this is what I've, through my life, I've been rich and poor several times, and I've kind of gotten good at it. I've gotten good at not acting like I had money in order to keep the money. The first time I got money, I bought stupid crap. And then I got pasted. And I said, okay, I won't be doing that again. The second time I got money, I diversified it all over the place, and it watered it down to the point where it slowly melted down to not being that much money anymore. I was like, dang it, that was wrong. And because I had pulled out of those high velocity assets. And so anyway, you do this a few times, you start to learn the best move to make when you take on that new big balance sheet is no move at all. You need to sit there at those levels or higher and do nothing at all for months and months, maybe a year. Nothing. Don't buy a effing thing. Because if you can do that, if you can have the resolve to not expand with your balance sheet, right? Your assets, your liabilities with your balance sheet, then what happens is it's like the universe grows beyond the point where you can exhaust it. And also you have a little bit more profound respect for what those currency units can do. And if the market S's the bed, you're not caught with over your skis. So right. I think for so many reasons, you take on that new money, that new value, whatever you want to call it, your balance sheet grows disproportionately large in a very short amount of time. You want to push pause and stop and do nothing. Don't buy anything. Eat your Campbell's thick and chunky. You go look at my house. I mean, it's a nice place. But if you go open the cabinets, it's Campbell's thick and chunky, right? And I have a fixed allowance that I'm allowed to spend every day, and I won't go over it. Period. Full stop. And that allowance is probably a tenth of what I probably could have that allowance be. But that doesn't matter. That I live by an allowance, period, full stop. And then I can separate myself emotionally from what's going on in Blockfolio. And then I can make continual better decisions because I'm not emotionally attached to these assets. If you get emotionally attached, you start getting angry and cranky and mean, and you rage quit projects and all this kind of stuff and all these human emotions that really have no business here. And I know, and some of these things I think I've learned just from being the emotional trader, and doing stupid things and be like, screw you, Amazon, stuck at $80. I'm out. I'll show you. I'm taking my $1,400 and leaving. So I think it's, and that kind of goes back to what, when we're saying, Jerry, you had started off with debt, assets, and confidence. And I think that's the way to explain any market, any market of scale. You can look at it in the kind of perspective of debt, assets, and confidence. But you can also look at yourself the same way. That's kind of what you were alluding to earlier.
Right. Yeah. I think probably the most impactful thing my entrance into this crypto space has brought is the journey of learning about the greater economy and financial markets as a whole, that crypto isn't this isolated island, right? Crypto is just another extension of these things. And it's through this journey of learning that, I mean, here, I'm 3+ years into it. I study all the time. I probably good 4 or 5 hours a day in hardcore study. And then just the chatting, just talking to other people is reinforcing this or reinforcing that. The point being that I've gotten to the point now where I have a pretty good understanding, but I also understand I need to learn a lot more. And it's through disciplines that I've been able to do that, right? Like a discipline of spending. I've lived off of $350 for damn near 3 years. And people have said to me, like I sent my friend a photo of my tennis shoes. I mean, they're dilapidating, man. They're not in good shape. And they're like, why don't you got plenty of money, just go buy a new pair of shoes. And I said, listen, I'm not at the spending stage yet. And I was like that up until 2 weeks ago, where I made a decision to buy this one piece of property. And now I had to start liquidating some assets. And I'm telling you, it was so
painful.
Painful. Thank you. It was so painful deciding how much of this and how much of that I was going to sell. Because every time I'd ever done it before, and I've scraped plenty of assets, it's always been to acquire more assets, right? And that was my little pattern. You know, I would play this. Every once in a while, there'd be a trade. I'd make a trade. I'm not a trader, but there once in a while, I'd make a trade. Or sometimes I got lucky, you know, with a VET coin that I bought at 0005 2 years ago, and now it's 15 cents. And now I'm going to scrape. But what I do is scrape it and buy more Bitcoin or buy more this or buy this or whatever. All assets. This time it's different. And people say, oh, well, Jerry, real estate and building your home is an asset. And there's an element of that that is true. But the thing I'll tell you right now, I've learned about finance, real estate is one of the shittiest friggin' investments you can ever make if you're doing it as an investment. Because try to sell it if you need the money. And
and if everyone else is trying to sell, by the way.
You know what I mean? So there's all this stuff. And when you're in crypto and you're used to dealing in, let's say you go to a good liquid exchange and you can get your asset sold, or you can buy the asset you want fairly easily at the price you want. When you start getting into regular markets and outside of the stock market and look at real estate or even some commodities sometimes, it's not easy to get what you want when you want it.
I want to see your tennis shoes, Jerry.
You do? All right,
Yes.
I'll be right back.
God dang
Entertain
it.
the crowd. I'll be right back.
Okay, I'm going to show you my shoes because I buy shoes and they're simple shoes. I'm going to hold it just at this angle so that, see, I buy simple white shoes, nothing fancy, nothing dramatic, because I don't believe in being excessive or fancy or schmancy. Simple.
Now, I've got to preface this. These are my good shoes. The really bad shoes were in mud and are drying out there. But these are the good shoes. But notice the treads are falling off. They're detaching from themselves. And these are my good shoes. The old shoes, all these little things right here are flopping. They make a noise when you walk. They go flop, flop, flop.
Jerry, when I was talking about sudden wealth effect, tennis shoes does not count.
You know what? It's a depreciating asset. I'm sticking to my guns. That's the deal.
It is. It
At
is.
$1.5 million, I will buy some nice shoes. I promise you that. This shirt, 4 years old. I mean, everything I own is 4+ years old because
I made this shirt. It's an NFT.
It is. Everyone just wants to be liked and accepted, and then it says something underneath.
On the back. Let's see if we can get to the
I
back.
remember that shirt. You did a giveaway on your channel.
Uh-huh.
Except for me, I don't give a. Yep.
See? Crypto till I die.
There you go. So, one of the things, so great plan, right? Have a plan. I'll tell you, when I was doing all my study about sudden wealth, when I did this Beyond Moon series for my channel, it was like one of the things is like people don't take the time to learn. Now, my audience, your audience, a lot of the folks on Twitter and interact with us on Facebook and stuff like that, they've like taken the pill, right? They drink the Kool-Aid, they want to learn. But the masses are not willing to take the time to learn. And now I understand why RAIs, registered investment advisors and stuff, RIAs, are so popular, because people see it as such a foreign thing, almost like a Mount Olympus that they'll never be able to transcend.
Well, there's also, doesn't it seem, I didn't go to school that long ago, and there was no talk. And look, I took economics courses, I took accounting courses and all that. I have my degrees in psychology, but you still have to take all these other classes. And I never learned about like a basic balance sheet. Never. And I later on when I was kind of going back over this stuff, I was like, why don't they, you'd hate to think that there's a they, right? They don't want you to know. I don't even think it's that. I think it's that they don't know. The they that's putting these curriculum together, it's not that important to them, because they just assume that there's a whole field of study, which is, well, for accounting, why would you do any accounting? You just hire an accountant. Right. And for a lawyer, you're just going to get a lawyer. And so you can kind of tease that out. And to an extent, it makes sense, because these were these fixed kind of cottage industries, and robots are going to do those jobs. So it's going to get back to, the crazy thing is it's going to get back to that. Why would you learn math? Robots do math. Why? It's true, right? There's going to be a point where we're going to cross that bridge again, where some of the things that we think are silly actually accidentally make sense. If you tease that out, let's go robots plus 5 years, because the first somewhat generally intelligent entity that's, again, that can fix its own code and rewrite its own code and expand and maximizes rewards in a computable environment and all these kind of things. As it grows, it's going to be on day one 10 times smarter than the smartest human, with all of the knowledge of all of humanity instantly at its fingertips. So we can't possibly understand what 10 seconds later or a minute later or a year later those entities are going to be experiencing. We do not have the cognitive capacity for that. But maybe, that's another thing that we cross this line where we're actually left with, all of us have this kind of sudden wealth syndrome. Like, if you no longer had to pay for food or lodging or cell phone or electricity, if they said, guess what, America, all bills paid forever, what the F do you think would happen? I don't know. I'm just kind of starting to consider this, because I did this deep dive into AI and what it means financially. But someone else had made a comment that I think I would go back to and say that when we reach that point, I think you want to be on the side of the haves and not the have-nots, because I think it's going to be have everythings and have nothings. And and to George Gammon's point, you'll own nothing and like it. I think, and I don't think that's a horrible thing. I think if everybody was fed, everybody experienced abundance of a sort where they didn't have to pay for medical and all these kind of things, and somehow the state through some basic income could provide that. I know a lot of people are like, that's socialism and all that. Right, but not all of socialism bad, and not all of, communism bad, and not all of capitalism good, right? Like, there's little bits and pieces. And so I think we need to think about that. I don't have any answers. I'm just starting to go and make that jump. I think AI is coming really, really fast. And then And then when it gets here, from moment one on, I think everybody's life is going to look a lot different. But I think when we cross that chasm, it makes a lot of sense to have a lot of scratch when it happens, because I think the wealth gap will be insurmountable. And there may be a point where the wealthy just leave. Like it's impossible to transcend unless you are plucked, right? Some rich guy finds a really pretty girl. Some rich girl finds a really pretty guy, or a girl finds a girl, or a guy finds a guy, or pronouns find pronouns, whatever. Unless you are plucked into the cloud city kind of existence, I think you're stuck, because if there's an abundance situation where we're all getting UBI, I know we're going down a tangent, but I think you have to explore all these things again to come up with that number that works for you. And like, so if we go to that abundant society, how does anyone get ahead? I mean, does anybody even have any drive to get ahead? If you had all your bills paid and all that, I know, like when sometimes people get money, they're all out of give a crap. Look at half the Ethereum developers. They haven't done jack smoke in 4 years. Why? Because they're rich. People are like, hey, can you drive me to the airport? No, bro, I'll get an Uber to take you. I'm not doing nothing. Rich. Yeah. Right? Like you ask Vitalik Buterin to give you a ride. That's not happening. He's not getting out of bed till the crack of noon, man. And so I don't know. I just think there's a lot of thinking we need to do as we approach.
There is definitely value in giving of yourself, whether it be to complete a project, build a fence, paint a house, apply your brain cells to a problem at work and you solve it. There's definitely something to that. I grew up working, I started working when I was 12, started a little company when I was 15, not officially, but it was run like a little company, and got my license at 18 and actually had a real company. And I have always worked. And my son, interesting having a conversation with him the other day, because I'm going to bring him down when we start building this property. I said, did you get your driver's license yet? He goes, no. I go, is there a reason you don't have your driver's license? You're going to need your ID and all that stuff. And if I buy a vehicle down here, you're going to need to, part of it's going to be driving it. You're going to, just like I'm going to have to drive it, you're going to have to drive it. He goes, Dad, I haven't had to drive. We got Uber. And it clicked to me that in his entire adult life, he's had Uber. That's a new thing to you and I.
Yeah.
And I went, and there's not a good or bad to that. It's just different. And so suddenly there are these subtle kind of foundational changes happening around us. I kind of took it for granted. I never thought about that. Why would you not want to know how to drive? Well, there's 800,000 people that will do it for me for a nickel, or, for very little money. And that was like, wow. And then I started thinking, okay, I think a lot of what we got going on in crypto is going to be very similar. I think that we're going to see projects fail, but there'll be a couple that stand out and create a subtle change that in 10, 15 years, something that we grew up doing will not need to be done anymore, because here's this thing that does it for literally nothing. Well, and I'm not sure exactly what those kind of things will be, but I think they fall right in line with what you're talking about with AI.
Right. So then tease that out. So Uber is the number one employer in like 32 states, something like that. What happens when self-driving cars, which let's face it, they're basically here, but we're probably 5 years away. That's not very long. So what happens when self-driving cars replace humans driving? All those people are out of work.
And they'll do it cheaper.
So you take the number one employer in 32 states and you just go, bye-bye. Gone. And go look at the industries. Gone. Nurses, gone. Lawyers, gone. Tax accountants, gone. I mean, gone. And you start realizing we're not super important, us humans.
Well, it goes back to the message that you can't get ahead by saving. And if you understand that if you're trading your time for money, a lot of those things are going to go away. How are you, even with UBI, is UBI going to present the quality of life that you want? I don't know.
Well, it'll be just enough. I don't know if universal basic income will ever be what everybody wants, but if it's just enough, I think a lot of people are happy with just enough. And that's another thing too. I don't know if vapid consumerism works for everyone. I mean, I don't know if we all had kind of everything we needed, I'm not sure we would have these kind of consumer traps that we have now, because I think a lot of these corporations that are just based on milking the last drop of consumerism they'd have to really shift their focus, I think.
Sure. Well, this is a really good time to break and bring in our lady from the street, Bitta Avenue.
Pew pew.
Uh-oh. And I'm going to try it again.
Damn, AI got her.
Uh-oh. Okay, hang on. There we go.
Happy Friday.
Hey, Bitta. So, Bitta
Hi,
survived
everybody.
COVID.
I did.
She just got off the plane from Afghanistan. She survived the Taliban attack. She survived COVID. And now, what's shaking Bitta?
My goodness. Hi, Nick. Hi, everybody. It's just been, when they say when it rains, it pours, it has just been just one thing after another lately. But we're still here. So here we go.
Right on. So did you get a chance to catch much of the show?
I did actually. I was listening to it on my other phone. I just couldn't log in, but I was listening to it as you guys were talking. I had a couple of questions for Nick about some of the things that he talked about.
Fire away.
So I heard you say something about like the second time around, you started diversifying with your high velocity investments. Can you elaborate a little bit more on that? Like, what do you mean by when you're trading your or rearranging your high velocity assets?
I was clipping my big winners too early. Like if, in crypto terms, I was probably selling when I was up at 30 or 20 or 30 or 40% rather than, shooting for 2Xs and 5Xs and 10Xs. And this wasn't in the crypto space. In the crypto space, I've played my game theory out. Yeah, I basically said the last time, I was like, okay, I screwed this up. If I get another at bat, then this is the way I'm going to do it. And I haven't strayed. In the crypto space, I haven't strayed at all. I've followed my 10X take 20, 2X take 10, and then on junk or non-quality assets, you get 1 week. I'm going to hold junk assets. You get 1 week. I'm out. I'm scraping out my original investment. And so by doing and staying strict to that, I've experienced the bloat of the account beyond what, seems rational. But before I was taking the winners and I was cutting them. Just think about this, what the hell? It's weird. If you took, Cardano that was 3 cents, and when it got to 4.5 cents, you said, I'm up 50%, I'm out. Well, you would have missed another 90x. It's like, that would be bad. And so I think if you want world changing, kind of life changing, money, currency units, value expansion, if you really want to make enough this time where you realize there may not be another chance like this. I don't think there's going to be. I don't think there's going to be another chance like this. When this thing is formed, my gut says it's over. Like that's the last. Our kids are not going to have an opportunity like this. Our parents didn't. Their parents didn't. You have to go back to the 1600s to have a true opportunity like this, unless you're born into a wealthy family and you get put in all the VC stuff and you get, advanced, unless you're in the fat, rich white guy club, of which there's like 17 people and everybody else just kind of watches them. And then, right. But if you're not in the good old boy network, you're like us, Joe Sixpack. I don't think there's going to be another opportunity like crypto for many, many lifetimes. And the dot-com boom was not that. It made a handful of people wealthy, and it wasn't this kind of expansion. Remember, when you look at all of the expansions in finance, as far as data, Bitcoin is the most appreciating asset in human history. It is incomparable to anything you've ever looked at, period. So when people compare, oh, well, what about, no, it's the most appreciating asset in recorded human history. That's different. And all I'm saying to that is, doesn't mean tomorrow it just means that this is different. When they say, well, it was different last time. It was different last time. But last time was, 1696. I don't know when the next one.
Last time was also Facebook and Amazon, but the users of the network did not get the money. It was the capital stack. It was the investors, the shareholders.
The people that had it at 2 cents a share.
Yeah.
All right, Bitta, fire away.
The other question that I have for Nick, from what you had discussed earlier, is when you say when you have high gains, you just do nothing. Can you elaborate a little bit more on that? As far as are you saying save it? Are you saying leave it in the market? Are we talking about just the crypto market? Are you talking about the security, like the stock market? Like what are those lessons that you learned?
No, good questions. So full disclosure, I don't participate in the stock market other than I have a bunch of Apple shares somewhere that I've had forever, and I use Apple devices, and I just haven't found a way to sell them yet. Not the devices, the shares. I don't know where they are. I get a dividend check 4 times a year, and I use that and some backward math to figure out how many shares I have. And if I could sell it easily, I would sell it, because I believe that the traditional equity space is a completely rigged game. Doesn't mean you can't make money in it. It doesn't mean there's not ways to make money in the options market and stuff. And I did all that. I don't trust it. I don't trust any of those other markets, because there's too many corruptible humans to rug pull all day long things that we can never audit or edit. So I'm out of those markets. But in the crypto space, what I mean is that if your goal in this is to develop life-changing wealth, like not get rich for a few weeks or a month or buy a new car, you don't want to live near-term rich. If you want to experience wealth, which is never, ever worrying about money ever again, you, your kids, your family, and anybody you want to give money to, right? To truly experience material abundance, then you have to not expand your purchasing with the expansion of your balance sheet. Right? So if I start making twice the money and I go buy twice the house, I'm not making any more money. I've just absorbed that extra cash flow with more assets that I'm going to have to service, which then they look more like liabilities. So I'm just expanding my liabilities. And if you expand your lifestyle, maybe we should say it that way. Don't expand your lifestyle with your balance sheet. You need to compress your lifestyle and be minimalist and be willing to delay pleasure. And if you can delay pleasure and then because what happens is, and goes back to Jerry's always talking about compounded interest. If you can compress your buying habits, if you can compress your desire to express pleasure while your balance sheet experiences this growth, at a certain point, your buying habits, even if they seem frivolous, are such a tiny, tiny, tiny fraction of the passive income you're generating from your investment and from your portfolio that it doesn't matter anymore. It's a rounding error. That's why rich people don't care if the price of eggs go up 10 times.
Yeah.
They don't see it, right? It's the person on the poverty line that gets crushed. And so you have to imagine, just because your balance sheet is expanding, you can't expand. You need to reduce. You actually need to tighten it and say, okay, can I tighten it right now? Can I spend nothing and let the effects of compounding interest change my life, my kids' life, my family's life, and then whoever I want to shower with, goodness, joy, happiness, growth. Bam.
I know Jerry's philosophy of how he does his compounding and how he earns his interest and things like that. Do you have a similar strategy as far as crypto, considering it goes very volatile, it goes really up and really down, and there are times when you have to take profit? How do you work around that as far as taking profit? And are you doing like platforms like Celcius and things like that as well, or do you have a different?
Yeah.
Okay.
Yeah. Everywhere you can. I mean, I believe in spreading your risk out to multiple platforms. So I like Nexo and trust Nexo, and I don't super like Celcius, but again, it's about spreading risk, spreading your platform risk. I stake every asset that can be staked at the protocol layer, so as close to the developers as I can. And I only invest in projects where I trust the developers, so that the likelihood, it's not non-zero, but the likelihood of a rug pull or some cataclysmic developer internal attack is very little. It's very mitigated. And so, I definitely try to monetize my money everywhere I can. I try to get as much yield, right? I want my money making money. I look at my currency units as little employees, and I'm like a pimp. And they's my, they're my workers, or they're my non-gender money workers. And I put them on the street, and I want them to make as much money as they can 24 hours a day. And so, yeah, I do use Celcius and Nexo. I don't trust BlockFi. They're very sketchy and they're stupid. And I don't want to go through the list of things I don't like, but I will say I like Nexo and Celcius. I like and trust Coinbase and Kraken. Beyond that, you're taking some risks. So every asset I get, I stake it as quick as possible. I get it out of my hands. I like things that have a freeze policy, like to unstake, because that means idle hands won't have me selling and moving things around. And when you experience gains, you just got to step away and just do nothing. Do nothing. And eat popcorn.
All right. How about one last question, Bida, and then we'll bring Brady in for final thoughts.
Actually, that was all my questions, Jerry, because I came a little later, so I figured a couple of questions would be enough. So.
Well, you always bring really good questions. How about I ask you a question?
All right.
So, have you changed your kind of outlook as far as investing over the last 4 months? How much of that's changed with the hack that you had? It's been a few months. You're still not working, right? You didn't go get another job. So how are you thinking about investing? Has that changed much? I haven't heard you discuss this.
Honestly, no. I haven't really. I like the strategy that I had. Now that I've experienced getting hacked from a different level, as far as because the company got hacked, that I got hacked, that I think my original reservation of me not wanting to use something like BlockFi or Celcius has kind of lifted a little bit, but I still can't use those platforms anyways, because the state that I live in, those platforms I'm not able to use. But I am looking forward to be able to use them, because I do stake my my stuff that's on Coinbase, and I do stake my Cardano and things like that. But I've never actually went to platforms like Celsius. I thought, okay, maybe it might be too risky for me because I just don't know enough about it. So I think you and I had that conversation, right, where I said, I'm going to hold off and learn a little bit more so that I can feel comfortable to do those. And then I opened a Celcius account, and then I learned I couldn't even use it in the state that I am. So yeah, I mean, there's my thought of what risk is definitely has changed a little bit. So I'm trying to do more, learn a little bit more about security. So I think that's where I'm lacking, is the security part of it. So that's what it's not the investment portion that I'm working on. It's more the security portion that I'm actually trying to tighten up and get better with and have a better understanding of.
Right on, right on. Well, we're all learning. And, different weeks, it's going to be different stuff. Let's bring in Brady. Brady, what do you think of the show so far? And do you have anything you'd like to comment on?
I do, and I actually, it started maybe a few months ago, but after Nick really pounded the pavement rather, on the value of time versus the value of currency units, and I kind of sense, or I think I've been getting more impatient recently, just because I feel as if the time that we have is obviously limited. We can't fast forward it. We can't rewind it. We can only live it. So that's why we always find it so hard to do good habits that help give us more of our time to ourselves. And in this whole not exchanging your time for money and making your money monetize itself, that's kind of the good habit that keeps on giving, but balancing your portfolio and doing things like, assessing your risk and trying to figure out, how well do you know something versus is it even possible? So I think we're all learning in the right direction, and it's weird because it's only just started. And I think when Nick refers to his AI thinkings, we really need to understand that if you start a conversation with saying, 5 years out, that's because he's had to think 5 years out to figure out, based off of what he knows now to be true, what could he believe if he, sussed things out and walked through it and thought, well, what happens if this? What happens if that? And I think it seems like more and more adults around us aren't willing to do that, because then they kind of have to either backtrack and say what they got wrong or whatever. So it seems like hopefully within the next 5 years, more adults or more opinionators or people that can affect change will be either more humble or accept the embarrassment of maybe being wrong. So it's kind of like hopefully we can reflect so that we're not effed 5 years from now, because all those movies about the future could happen because the majority of people have watched them. Do we want them to happen? No, but no one wants to study. So it's like, what are you going to do?
Nick? Nick, final thoughts.
My advice, my final closing thoughts are learn to live beneath your means. Set an allowance. I think it's incredibly powerful if you set an allowance. It's actually kind of fun, because then if you want to buy something, you have to wait a few days and you have to, be like a kid again. You have an allowance. That's all you have. If you do that, I think you're going to see your balance sheet and your level of stress reduced greatly, because your buying power is not pegged to some weird nebulous number that goes up and down every day.
Right on. Excellent. I have my final thoughts. Great show tonight. Lot of wonderful stuff happening. The Patreon group is growing. Thanks to the 4 new subscribers this week. Good to have you guys. Really excited about the concept of budgeting, right? I've been living on this budget. I've taken some money out of the market. I'm going to be building this property. I'm going to have to do it on a budget. I'm going to have to go throw 2 belts on again. I'm going to actually go work again. And that's kind of exciting in a way, but I've gotten kind of old and I've gotten fat and I've gotten out of shape, and I can tell there's going to be some hard backache nights coming in my future, but it's really okay. The thing of it is, have a goal. And if you have a goal, are you willing to sacrifice for it? And I think that's really the bottom line, right? How much are we willing to delay gratification, right? My whole life, I made a lot of money and I spent a lot of money. I never gave 2 shits about tomorrow. Well, it's funny how things change. And we all can change, even though you hear all the stuff. You can change. It's how bad do you want it? And I think you're right, Nick. I think this is a shot. I don't know if this opportunity will present itself to the masses like this opportunity has. I think at some point, the Amazons of the crypto world will be established and they'll be out of reach for most people. even though you can divide it into 1 million.
Well, the opportunity for that great expansion, that first great expansion.
Opportunity for thousands of percent ROI
Right.
are going to dissipate in the major projects.
Yep.
And then it'll be and so I hadn't really thought of it like that this could be the last great expansion for normal people, the ability to get in on the ground floor. So, folks, you've tuned in. You're here. Strap in for the ride and don't sell yourself short. Because once you're out, you're out. And time goes by, you can never go back to where you were. We may never see 3 cent Cardano ever again. That's my story. I'm sticking to it. And until next week, everybody, Pura Vida.